And that's exactly what came into my mind the other day was, what can ChatGPT come up with that maybe some other, research has not? And one thing I can tell you is that what came back was somewhat surprising, but in addition to that, it wasn't because we are well aware of the ways to create optimal retirement income plans. This is not a new subject. But what we really wanted to do was test it against the tried and true, in a way, the 4% withdrawal rule, which is the more traditional approach. So let's talk about real briefly what that 4% withdrawal rule is. And that is back in 1994, a financial advisor named William Bengen, or I guess, Zach, in this scenario, we should refer to him as Billy the Kid Bengen. And
Billy the Kid.
introduced he
Now play the
introduced the
music
rule.
again.
Hold on, let me get that music real quick. Where is it? Here we go. Here it is.
Show what Billy looks like now.
Billy the Kid Banging. There he is. Anyways, oh, there it goes again. Billy the Kid Bangin introduced this rule based on historical market data, suggesting retirees could withdraw 4% of their retirement each year, adjusted for inflation, and then that their portfolio would likely last for at least 30 years.
Yeah. And at the time, really, the strategy was based on conservative assumptions about the market returns, right? So when we start to look at the bond yields at that time, which were significantly higher in the 90s, you're looking at 6 to 8%. So times have changed. The environment, the landscape is completely different today. So we've seen a drastic change from 30 years ago.
Yeah, so the interest rate environment's definitely changed since then. And now that we have that foundation set of what the 4% withdrawal rule is, and what some people still rely on today, let's quickly recap, the traditional 4% rule scenario. So what I did was I asked ChatGPT to have a starting retirement balance. So at the point where someone's reaching retirement, and the person's age that I used in this scenario was age 65, and they're starting out with $1 million retirement portfolio. And I asked them to apply that 4% withdrawal rule, which in this case would be a $40,000 annual income distribution that's inflation adjusted at 3% per year. And so next, I asked ChatGPT to show us a scenario of a 25-year period using historical returns, so real data from 1998 to 2022. And this portfolio would be typically comprised of 50% stocks, 50% bonds. And what we found is that during this time frame, the ending balance of that portfolio was $1,000,000, $1,082,940 after 25 years. So it really held up. It sounds pretty good. And I used that time frame to incorporate two of the largest black swan events in our history. That was the early dot-com bubble from 2000 to 2003, and then the global financial crisis in 2007, 2008.